Okay, it's a small range day today. The market down about 16, 17 points at 10,814 is where we are at. So there is not very much happening. Lots of earnings are trickling through, and that is Rashesh Shah of Edelweiss talking about the Edelweiss numbers for the third quarter, which hit the screen about, an hour back, hour and a half odd back. So that is what is coming through. With me is my colleague Sumaira. Hi, Sumaira.
Hi, Prashant. Good afternoon to you as well. And interesting to see also what's happening in Europe. But before that, let's just hear out Rashesh, and then we'll get you the European market opening as well.
And those moves helped us in this quarter to manage our liquidity. This quarter also we were able to raise fresh money. We raised almost 9,000 crores of resources in this quarter, out of which almost two-thirds was in the long-term nature. So we were able to raise close to 6,000 crores in this quarter of long-term money. And we have always believed that in uncertain times, it is better to be conservative. So in this quarter, we also took a lot of repayments on our books. We continue to scale the retail book, but on the other books, we were more conservative in growth. And we have always believed that in quarters like this, it is worthwhile giving away some temporary growth for a quarter or two to make sure your balance sheet and your liquidity is very strongly protected, because we will get back growth again when things normalize. But if you can show your strength and your agility and your liquidity management in those turbulent quarters, you become stronger as an organization. So we did that in this quarter. Our liquidity profile has improved. So we have repaid all the obligations of the last quarter. Commercial paper is now approximately about 7% of our total borrowings. So we have brought down even whatever small reliance on commercial paper we had has come down even further. Our liquidity cushion has improved. Our asset side has become stronger. So all in all, it was a trying and a testing quarter, but I'm happy that a lot of our hypotheses and models showed that we were prepared for that, and we executed on that and came out stronger. In terms of liquidity, currently we hold almost about 14,000 crores of balance sheet liquidity, which is more than 25% of our total balance sheet. So we can convert almost 25% of the balance sheet in liquidity in 45 days. And that shows the agility and flexibility of our balance sheet as a whole. Thanks to our liquidity management and conservatism in this quarter, the debt equity for the company has fallen to 4.2 excluding treasury assets. Last quarter it was 5.2x was the DE, which has come down to 4.2. So the balance sheet the gearing has come down in this quarter. It has come at a cost. There has been a fall in profit on a Q-on-Q basis, but I think it's been as per the plan, as per the strategy we had, that we wanted to scale back, we wanted to conserve liquidity, we wanted to make the balance sheet strong.
Okay, Rashesh Shah, the message being they've been conservative this quarter, focusing on the balance sheet and just sort of consolidating that. And, we'll have Mr. Rashesh Shah for a one-on-one interaction in a bit from now. The other one was NIIT Limited. The management was talking, and again, we'll have them talk to us in just a bit. But look at the stock. It's down 9% now. So it's actually sold off even more at 163 odd rupees. So, okay, I think I'm looking at it's not. I was looking at something else actually. But yeah, NIIT Limited is, you're right. I mean, 6% lower. 88 rupees is where the stock is at this point in time. After the numbers. So again, in a bit, we'll have the management talk to us. There was also a flash coming in on Jet Airways. So this was a flash, I think, on one of the wires. The regulator, SEBI, essentially saying that they have, up till now, expressed no view with regards to any exemption which may be granted to any potential sort of takeover of Jet. With regards to open offer, etc., etc. So, not received any reference with regards to relaxation or regulation for Jet Air. That's what's essentially coming in, and it's not saying anything at this point in time. We reported yesterday that the SBI chief is going to sort of approach SEBI and ask them for relaxation to existing conditions and rules. And SEBI saying so far we've not received any reference nor have we expressed any view with regards to that. Okay, we are looking at the market, which is down still about 20 points or so. I'm being told that we also have Shireen in a conversation with Jesper Brodin, CEO at IKEA, the World Economic Forum in Davos. Let's cut across for a bit.
We're very curious also to see how India can help us develop a business model. We're convinced that the adaptation to e-commerce and the combination of using online and the physical experience is something already today the Indian consumers are expecting. So as much as we're ambitious about building flagship stores, we're also very ambitious about building distribution networks and digital experiences.
But on e-commerce, because that's a part of your strategy globally as well, are the rules in India, which have now been reiterated or revised by the government, restrictive? Do you believe that they will hamper your e-commerce plans?
It is our belief, and through all the excellent contacts we have had with the states and on an Indian broader level, we feel that we are in good dialogue with people. It's a matter of how to progress and with the respect of the massiveness of moving India, so to say. So we have lent ourselves as a speaking partner, but we're also ambitious and a believer that India is on a path of
All right, so that's the IKEA chief over there speaking about their plans, and of course India figuring at amongst those plans as well. Let's get a tech check. Ashwani Gujral of ashwanigujral.com joins in now. Ashwani, good afternoon to you. Pretty flat on the market now. We seem to have slipped a little bit now. What's the index trade and what are your individual stock strategies?
See, the market is now moving in a directional way. It started to trend. The 10,800, where you have the 50-day moving average, isn't providing the kind of support that people would have hoped. My sense is that today's expiry, you could actually collapse as we go into the afternoon, because the bank Nifty clearly has not been able to find support, and probably you'll see 26,950. Also on the Nifty, 10,750 looks like it's going to happen. So that way, don't try to play it like a sideways market. It's actually fairly directional, and even large banking stocks, HDFC Bank, etc. Generally on days of expiry they tend to do well, but today they've come off the highs. So that way, next couple of hours you should see more downside action on the market and banks in particular. Having said that, Mahindra & Mahindra Financial is a sell with a stop of 430, target of 405. Tata Motors is a sell with a stop of 178, target of 164. And Godrej Property is a buy with a stop of 735, target of 760.
Okay, so those are trades coming in. Ashwani, appreciate you joining in, and good getting that perspective from you at this point in time. Let's just quickly look at Europe as well in terms of the open. We actually didn't look at the rates, so we'll have them up on your screen. It's actually a mixed kind of start. We've got the FTSE 100, which is down about 0.25%. CAC is down about 5.5 odd points or so. And I saw a lot of green right at open, but slowly it's starting to come off. Actually most markets now are down. DAX is down about 0.25% as well. So, and the Euro Stoxx 50, although it is still just 10 minutes into Europe opening, has already slipped into the red after opening up a little bit. So that's basically the sort of information coming in out of Europe. NIIT Limited reported numbers. Mr. Vijay Thadani is Vice Chairman and Managing Director at the company. He's joining us as always to take a few questions. Mr. Thadani, first up, briefly, if you can give us your own qualitative perspective in terms of what happened during the quarter compared to what the few expectations we had. The numbers do look a little subdued.
Okay. I think there are a few things visible in these numbers and there are a few things which are not. So let me first give you my own perspective. I think first is this is the second consecutive quarter when we have had a nearly double-digit growth, 9 to 10%. And that has come after a very long time, after 4 or 5 quarters. As you know, we have been going through transition in some businesses as well as challenges in some others. So, given the fact that we have had 2 consecutive quarters of growth, which is much better than others, is one positive sign. The second is the revenue has grown 9% and operating margin has also been at 9%. Our star business, which contributes 71% of the total revenues, is corporate learning. And corporate learning has grown by 25% this quarter and has had a very solid operating margin of 15%. So that, along with a very strong order intake and deal momentum that they have, in fact, the revenue visibility, which was 226 million at the end of last quarter, has now become 255 million on the back of 2 new contracts, 1 expansion and 1 extension, and 1 renewal. And this renewal is very significant because this is a multi-million dollar, more than $50 million visibility over the next 3 years. So that shows the affirmation of faith of our customers. So that's so much about corporate learning group. On the skills and careers, I think the visible parts are not telling the whole story. As you know, this business is in transformation. So 2 major elements, which was StackRoute. StackRoute has grown 50% year on year and has a very solid momentum in terms of new orders, etc. The second is the TPAS, the Talent Pipeline as a Service. That, with the increased hiring in IT and banking, is also shown a very good momentum. Having said that, the enrollments have been on a growth path. The collections have been on growth path. Order intakes have been on growth path, but its effect is not yet fully felt in revenues across the board. Some of our larger centers have experienced growth. So I think we are on the right track and trajectory as far as transformation of that business is concerned. I think those are 2 strong points. We are emerging at the end of the quarter with a stronger balance sheet. Our ROCE is up, operating ROCE is up to 14.8%, net debt levels are down. So both liquidity, profitability, as well as the deal momentum is high. Maybe the subdued part of the results you are referring to is net profit, but that is caused by the forex volatility, which actually is something which one does not provide for. So otherwise, I think it's a very positive quarter.
Mr. Thalani, good afternoon. Take all your points on board. Let's concentrate a bit more on corporate learning. So last quarter it grew, 28%, this time 25%. For FY20 now, are you looking to revise your earlier guidance of 15% higher? And how much better do you think this segment can do?
Yeah, so overall, for the year, we have been on the higher side, on the upper side of 15% guidance. Right, we have been between 15 to 20%, and I have a feeling we will end the year also at the same rate. And lots depends on the new orders and the transition time that it takes. So I think more details will have to be gone through for us to comment. But given the trajectory, I don't see any reason why we would not continue with the trajectory.
So $255 million is the you said revenue, the order book, right? I mean, it's increased to 255.
No, it's a revenue visibility.
Yes.
We measure visibility as an indication of the sum of all the deals that we have. And then as we burn revenue out of that visibility, then it reduces. So the visibility has increased substantially in just 1 quarter.
Okay. And, sir, lest we run out of time, the important question on investors' mind, what's happening with the stake in NIIT Tech?
Well, it's a standard question. It has a standard answer. If you are referring to what's been going on, we've heard it as well, and you know we don't comment on such matters.
Can I press you for a little bit more, Mr. Thalani?
By all means.
I mean, is it at what stage is the process at? I mean, if you can give us any details at all.
I don't think I have any details to share, so I can't give you anything.
Okay, all right. So, not very much on that front, but it's a pleasure, sir. Thank you very much for joining us on numbers. And I mean, I guess at the appropriate time, you'll have more to share on the NIIT Tech transaction as well. But the operational sort of numbers, all which Mr. Tharani put out for NIIT Limited, look quite solid. And he said the profit number essentially was because of forex volatility. But otherwise, I mean, and I think he left us with that important point. Revenue visibility has increased quite substantially in just one quarter. That stands at $255 million or so at the end of the third quarter.